Importantly, it intends to bring together and promote conversations between businesses, government and researchers in order to help Australian organisations develop a strong safety culture, which is critical to running a successful business. NRSPP has developed a range of case studies, runs working groups on key industry issues, and is developing a benchmarking tool. This webinar is part of helping share workplace-related road safety knowledge, which applies not only during work hours, but of course when the staff are off duty. So that's enough on the NRSPP, and I'll talk a little bit more about our webinar presenter today. Now, our presenter, his name is Barry Jenner, and he is an accredited mine shop facilitator who has a wealth of experience in management consulting as well as facilitation, with the reputation of being able to get things done. Now, that's not a bad reputation to have. He specialises in profit improvement for small to large organisations. Please welcome to the studio Barry Jenner. Welcome, Barry.
Thank you, Angela. It's great to be here.
Fantastic. All right. Would you mind tapping over to the next slide so our audience can see your details and your photo there? So everyone, Barry Jenner, as I introduced, and please don't worry about taking down those contact details, as I will be sharing all of the presentation material as well as the recording of today's webinar with you all once it's concluded. My name is Angela Juhas, and I'm your friendly webinar moderator today, and my details will come up on the next slide there. Feel free, if at any point you have any webinar related questions or concerns, to contact me at any time. We also take ideas for new webinar topics, so get those through if you have any. Now, just get through a few of the formalities before I hand over to Barry to commence his presentation today. Today's presentation will be approximately 40 minutes in duration, and we've allowed some time there to take questions as well. And we are recording today's session, so no need to take notes. As I mentioned before, we'll be sharing all of the content material with you. Next slide, please, Barry. And the next slide, please, Barry. Thank you. Now, the questions box there in your control panel, ladies and gentlemen, is where you can type your feedback, your questions, thoughts and comments, and I'll be reading those out to Barry throughout the presentation, so please don't be shy. Webinars are certainly more enjoyable when they're interactive, so we welcome all of that coming through. And just to get you all practicing using that questions box, if everyone could just kindly type in their name and where they're joining us from today, that would be wonderful. So while I wait for people to type those through, I'll hand over to Barry. Welcome, Barry. Thank you for coming all the way from Hawthorn, Victoria.
It's great to be here. Thank you, Angela. Very kind of you to invite me to present today.
Absolutely. I know people are quite keen to learn more, as am I. I understand this has a little bit of a psychology focus, which is certainly my background, so I'm very keen to learn more. And thank you, Jerome from Melbourne, and Ashish from TMR in Brisbane. Welcome. Amanda from Rocky Point, Queensland. Thank you for joining us today. Mark's joining us from, he's a corporate driver training Australia, so thank you very much. And thank you, Kate, also from Southworth. Okay, Barry, I think we're keen to get started, so I'll hand over to you without any further ado.
Great, thanks again, Angela. Now, this is just a little bit about me. I'm a management consultant, chartered accountant, and I specialise in improving the profitability of businesses. I facilitate continuous improvement for a whole range of businesses throughout Australia. In recent times I've been to Tasmania, all around Victoria, and from time to time in New South Wales and Queensland, and even over in the West. So it's good fun helping people continuously improve their business and spend time working on their business rather than in their business. The agenda for today is there. We're going to look at understanding your current change potential, where you are now, where you want to be and how to get there. We're going to talk about mind mapping and Pareto. it's a great problem-solving tool. We're going to talk about force field, which is a really good problem-solving tool. It takes a while to get the hang of it, but when you do, it's very valuable. We're going to talk about sustainable competitive advantage, an internal focus as to how you distinguish yourself from your competitors. We'll talk about a strategic SWOT analysis, which is different from just an ordinary SWOT. And we're going to talk about developing your one-page plan, and we'll have questions. So let's get moving. Do you have a clear 3-year vision for your business? And many people don't. And you should be able to write it down, either in words or even a picture, to understand where you want to take your business. And do your strategies regularly get implemented? We find in talking to a lot of people that they've got good ideas, but the implementation just doesn't happen. So that's a big issue, a big barrier for many businesses. And do you have a Oh, right, okay. Oh, okay. So you have the desire to do something different. If you're happy with your present situation, you won't change. So, but just having a desire to do something different is not enough. So this slide looks at your change potential. You need to look at your dissatisfaction with your present situation. How clear is your vision for where you want to take your business or take yourself personally, and how clear is your plan? So, for example, if you say, I've got moderately dissatisfied, I'm 5 out of 10. Vision, oh, that's not very good at all. My vision's only 2 out of 10. The plan, oh, that's very poor too, it's only 1 out of 10. If you then multiply 5 by 2 by 1, you get to 10. Out of 1,000, that means you've only got 1%. And our research shows that unless you score over 64%, change will not occur. So if you're not dissatisfied with your present situation, you're happy with it, and the score's low there, and you're low on vision and low on plan, it just won't change. So what you need to do, if you do say, look, I want to change, well, you need to increase your dissatisfaction or increase your vision, at least write down what your vision is for your business. And it doesn't have to be war and peace, it need only be a page or two, and you also need to have a plan. Now, one tool which is not mentioned here but is very good is you could write down in a journal your present situation of where you are with your dissatisfaction, vision and plan. Journal is not a diary. It is a very good way of just recording your present situation, and it's used by many people, so I commend that as a tool to people. So driving strategic change, it's just difficult. If it was easy, you wouldn't need webinars like this, but it's actually much harder to achieve than people think. I was with a client one day, a man in the transport or associated with the transport industry, running a very big, successful business, and he said, I've got to work out how to get you in here. And you'd think, well, if he's the boss, he could just say, right, I'm going to use Barry Jenner to help me, but quite correctly, he said, no, I've got to think about how to introduce you here rather than just imposing you there. So even for the boss of a business, a prime minister or a president, getting change is much harder than you think. But once you know your first steps to take, it's easier. So if you've got a range of business tools to help structure thinking as a leader and filter out non-strategic activities is critical when you're driving change across your organisation. And at Mindshop we've got about 120 different problem-solving tools gathered from around the world, and some developed by ourselves as to how people can improve themselves personally and in business. Now, the basic process that we use is to identify where a business is now, where you want to take it, and how to get there. And as part of this webinar, I would suggest it would be a good idea if you could just write down now in bullet point form, where are you now and where you want to be with your business, either personally or with your business. And in this instance, we're looking at improving the profitability of transport and associated businesses to be able to fund safety. So you might like to jot down where you are now with safety, with the key factors as to where your profit's coming from, because that's what we want to increase to be able to fund safety, and then of course where you want to get it. So in this example, profit's just 10%, which would be great for a transport business, and if you want to get it up to a higher figure, and of course it depends on how you measure it. So the relevant point is to write down the key points for your business where you want to increase the profits to be able to better fund safety. So this is just an example. So if you'd be able to write down the now for in your business, where you want to go to, and in a few dot points, then of course the harder part is the how. You need to think about that. So writing it down will be very helpful. We find this process works very well. Now, here is an example of mind mapping. It's a tool. Many people are aware of this tool, many aren't. It's a very good tool because there's no such thing as a wrong mind map. And once again, you can do it on a whiteboard, you could do it on a sheet of paper, you could do it in a coffee shop, by yourself or with colleagues. And the good thing is there's no such thing as a wrong mind map. Mind mapping was developed in the 1970s by an Englishman, a fellow called Tony Buzan, who was in Australia a year or two ago. There are books on mind mapping, there is software on mind mapping, and you just need to write down the issue that you want to work on, and in this case it's the vision, what you do, and various brainstorming has identified those factors. Now you can have mind maps that are quite small like that one. You can have very big ones which might go across a whole whiteboard, and they're a very good problem solving tool to identify a way of brainstorming by yourself or with different people to identify the top issues that you can take, or some actions you can take to achieve your vision. Now in this case we want to increase profits to be able to better fund safety. If every one of the roads was driving an armoured car, perhaps the road toll would be lower and people were protected. That's not realistic. So we're looking here at what can be done, what specific actions can be taken to be put into a plan, to be identified and acted upon to improve the profitability of the business, to give it more funds so it can make the business safer. It might be as simple as a truck fleet with 50 trucks, and the average age of the vehicles is say 5 years, which might mean that there's some vehicles are 7 or 8 years old, and if you can increase the profitability, buy more trucks, more modern trucks, current model trailers with safer fittings on the trailers, slightly better, safer prime movers, that you can then get the average age of the fleet down to 4 years. You would obviously make the business somewhat safer because the equipment would be more modern, more up to date, and less worn out. So that's a very big picture way of looking at it, but that's an example of how you can increase your profitability to make it safer. If you can do that with trucks, it improves morale. Drivers are happier driving later model equipment rather than old equipment. They don't like tatty equipment. They don't like older equipment where the maintenance might have slipped. So it's actually self-funding. You have less breakdowns. People are happier. When you buy a new truck, you get a new set of tyres. So it's actually self-funding. If you can keep the fleet younger rather than older, that increases the profitability, morale, presentation to clients right across the range. So mind mapping is a good tool, and you might like to do that if you've got a journal or a record there in front of you while you're going through this webinar. You can certainly spend a few moments jotting down, starting a mind map on what you need to do. Now, this is one of my favourite overheads. It identifies a poor man who is very frustrated. He's saying, I'd have a great business if it wasn't for the economy. The economy's flat. It's not that good right now. It'd be really great if my competitors weren't doing silly things. A client said to me recently, a transport operator, what do you think of the idea of someone mailing out their rates? And I said, well, I thought it was a silly idea because you'd just be competing on price, and he thought that too. So in that example, in a tough part of the transport industry here in Australia, in this case in Victoria, a competitor of this business was emailing out rates, which I thought was a very foolish thing, but it's just an example as to how tough business is. So this man here is blaming his competitors, but he's also blaming banks. Everything would be great. Oh, the banks aren't good, they're tough, they won't give me the money I need. Business would be great if it just wasn't for the banks, if the banks are reasonable. And the other factor he's blaming is customers. Customers have unreasonable demands, they're slow to pay me, they're fussy, they give me trouble with pallets. So this man is blaming everyone but himself. He's blaming the economy, the banks, customers and competitors for having a tough situation in business. So he has an external locus of control. And conversely, if the businessman said, okay, competitors are tough, I can't control what my competitors can do, but I can work out how to deal with them, how to distinguish myself from my competitors, which we'll talk about later in this webinar. I can adjust my plans to better take on and win business and reduce the chance of losing business. Customers, yes, customers can be challenging, so you've got to have the right customers, you've got to have the right profitability of your customers, and so you have to deal with your customers there. And banks, yes, okay, banks are bigger than me and they are fussy and they do want to get their money paid back. I do understand. I could present my situation as best I can and then they'll lend me what they think is appropriate. And with the economy, well, I can't change the economy, but I have to adjust and learn from that. So someone like that has an internal locus of control, and they just take it upon themselves to say, I can't control any of these things outside me, but it's up to me. If it is to be, it's up to me. With businesses, with customers, for example, if you have a situation where a business said, oh, I had a bad debt, oh, that was terrible, a customer went broke and failed and it cost me $50,000, I pose the question, well, whose fault's that? And it's the customer's fault. Well, that's someone who has an external locus of control. They're blaming the customer. Whereas the correct answer is, well, it's actually my fault because I extended credit to a customer, $50,000. I thought they would pay it back and they didn't. Transport businesses are no different from any other business, like a bank. If you want to borrow money from a bank, you have to fill out the paperwork. The bank will then decide yes or no whether or not they want to lend you the money, and they will only lend it to you if they expect to get paid back. So that's their credit assessment, and transport businesses have to do the same thing. They have to assess every customer that they deal with as to their credit worthiness and decide how much credit they want to extend. So if a customer fails on a transport or associated business and there's a bad debt, that's the fault of the transport operator, not the customer. So what you want to do, if you can only have the odd occasional small bad debt, that's fair enough, but if you have any big ones, that's a problem. So the point about all this is, if you want to be successful in business, you have to have an external locus of control and realise it's up to you to take action, not like this man who has an external locus of control and is blaming everyone else. And you might like to reflect for a minute or two, people in your life, personally or in business, do they have an external locus of control, blaming others for their problems, or do they have an internal locus of control and say, well, it's up to them to control and change? Pareto Analysis. This is a very good tool. It's often just called the 80-20 rule, and anyone in business or anyone in life should be aware of it. And examples are 80% of sales are made by 20% of your salespeople, 80% of your profit comes from 20% of your customers, and so on. You can read through that. And remarkably, 20% of your clothes are worn 80% of the time. It's how this rule applies, and it's very relevant in business because if 80% of your sales are made, or 80% of your profit comes from 20% of your customers, you've got to focus on looking after those customers, and you have to be careful of the other 80% of your customers. You've got to be careful that you don't spend too much time looking after them, because they only bring 20% of your profit. So if you get distracted and spend too much time looking after the 80% of your customers that only bring 20% of your profit, you're not going to be very profitable. And this requires constant analysis and understanding, because the 20% of customers who produce 80% of your profit can ebb and flow and change. It can even be one service provided for a customer could be part of the 80% of the profit and the other part is not. So you need to understand that and assess that, and you really should have a customer profitability analysis, which is the subject of another day. So it's important to do that, and it's also important that it's okay to say no to customers. If a customer comes to you and says, you've been charging me $100 a pallet, can you reduce the price? And you have a look at it and you say no, you conclude no, $100 is a fair price for the pallet, and the customer says, well, so-and-so is prepared to do it for $95, you need to stand firm and say, well, no, I'm sorry, I'm not prepared to do it for $95 a pallet. I would like to keep carrying for you. I'll keep carrying it for you till the end of the month at $100 a pallet, and if you go elsewhere, I'd be sorry to see you go, but I would stand ready to carry for you if it doesn't work out for you. And then if it doesn't work out for the customer, which it often doesn't, because someone who can do something for $95 has to take something out and leave something out. They might be less reliable on pickups, deliveries, all sorts of other issues. So often I hear a client say, well, I stood firm, the client went elsewhere and then they came back. Well, that's the right way to do it. And you need to do that and be prepared to lose business. And that's, no one likes to lose business, but that's okay, because no one can look after everyone all the time. It's just the way of the world. Now, it's interesting with the 80-20 rule, it's actually called Pareto. And Pareto was, Vilfredo Pareto was an Italian who lived in the 18th century, a scientist and mathematician. And he conducted a study and he found that 20% of Italians owned 80% of the wealth of Italy. And that's where the Pareto analysis comes from. And he did further studies and found that 20% of his pea plants produced 80% of his peas. So it's been used since then, and it's interesting, not everyone in business or anyone is aware of the Pareto rule, the 80-20 rule, and people ignore it at their peril. So when you've got an issue, you've got to, from your mind map that we had earlier, identify what you get down a whole lot of different items on a mind map, what 20% of all those ideas will give you 80% of the benefit, and then you can take some corrective action to improve the profitability of your business. Now, this is another great problem-solving tool. It's a force field. It takes a while to get the hang of it. It takes practice. We think it can take up to 40 times before you can actually use it properly. But when you do master it, it is an excellent problem-solving tool. I facilitated one just recently for a transport business, and their issue was service quality. Business was very tough for them, and we spent an hour or two on it, and we identified some specific actions. Now, the way it works is to write down the issue in the middle, the way it's written there. In this example, it's service quality. And you've got to be disciplined here, because people often, when you ask a question, people will start talking on at length, but you've got to bring them back and keep it focused. So you say, okay, what are the factors that will impact positively on service quality? Okay, in this example, just look at the blue, the numbered items, good products, in this case, in transport, good products or services. So that's a factor. If you've got good products or services, that will impact positively on service quality. What other factors will impact positively on service quality? More sales staff, more products, product brochure, contact program. And this can take an hour or two to do in real life, but it's a very rewarding process. And when you've exhausted that, all the positives, you say, what are the factors that will impact negatively on service quality? And you might say, oh, well, quality of sales staff, poor sales administration, lack quality customers, lack of individual service, limited rewards. And you don't want to write down the opposite of what you've written in the positives. And then when you've identified those, you look at it and say, okay, what are some other actions that we can take? An example of good products or services, what are actions that we can take to double the positive impact of good products and services? Well, if we had a good referral system, if we maintained loyal customers, if we kept staff informed, with more products or services, number 3, what are the factors that actions we can take to double the impact of more products and services? Responses are keep ahead of the market, more evaluation of customers' needs, and secret shopper tool, and so on. So you look at the factors that will double the impact of the positives. Then when you've done that, you look at the negatives and say, okay, we want to halve the negative impact of quality of sales staff. What can we do? Oh, we want to train to a higher level. Retention benefits, follow-up and feedback, and so on down through that example. And then you just look at it and do a Pareto. Okay, what 20% of all those positive and negative actions are going to give us 80% of the benefits? And in this example, the person facilitating the force field said more evaluation of customers' needs, updating customer service strategy, and training sales staff to a higher level, where the 3 ticks are the best actions that we believe will give us 80% of the benefit of improving service quality. So that's how a force field works. It takes practice and repetition to do it, and you need to be disciplined and get people to stop not going off and talking. You've got to keep focused and come back and ask regularly, what are the factors that will impact positively? Are there any other factors that will impact positively? Fill up the left-hand side, and when you've done that, without putting down the opposite of any of the positives, what are the factors that will impact negatively? And then go through and see how you can double the impact of the positives and half the impact of the negatives. So that's an excellent problem-solving tool. It's been around a long time, but it's not that common in Australia. But it works very well in a personal or business sense. It's a way of improving profitability. Sustainable competitive advantage can take quite a bit of time to work through, and we only have time to discuss it briefly today. And the way to do it is I did this recently for a client just a few days ago to identify their sustainable competitive advantage. This is quite a substantial business, and they hadn't actually expressed it. So you start off by looking at the left-hand column and identify the key success factors. What are the factors that are required for the business to be successful? It's like the ingredients in a recipe. And in this case, the business people, the key people in the business have said service, innovation, price, and so on, as you can see down the left-hand side. And then when you've done that, you then work through the other columns. And in the one that I did the other day, I think it actually had 23 key success factors. Filled a whole sheet of flip chart paper. And then you say, what is the value to the customer of the factor out of 0 to 10? So 2 or 3 is a low value to the customer, and 10, of course, is the highest value to the customer. So in this case, the business key people have said service, it's a moderately high value to the customer, that's a 7. Innovation, it's medium value to the customer, that's a 5. Price, it's a little bit better than average, it's a 6, and so on. So you've gone down there, and in this case, that's value to the customer of response time, that's a 9. Best people, that's also a 9. Brand name, that's a 6. And rate of change, that's an 8. And then you go through and look at the ability to beat competitor, current ability to beat competitor, but you ignore any of those where the value to the customer is less than an 8. So in this case, the current ability to beat the competitor is 7. So in that, the client, the business is saying, yes, we've got an ability to beat competitors on response time. We are a bit better at our response time, so we're a 7. So if they were the same as the competitor, they would have said a 5. Or if they weren't as good as their competitor, they might have said they're even 3 or 4. But in this case, they've said, no, Barry, we are better than our competitor, we're about a 7. Best people, our people are a bit better than the people in our competitors, but that's a 6. Rate of change, we're a little bit better than our competitors, so we're a 6. Then you look at internal impact. So what's the internal impact of response time? And the people doing the assessment have said, oh, that's very high, that's a 9. That's a big thing that we focus on here in our business, it's 9. Best people, yes, that's something we could, that's quite good, so I score that as 7. Rate of change, no, that's not something we're big on, that's only a 5. So then you multiply, or you add, I should say, you add column B to column D to see what the scores are, and in this case you can see that 18 for response time, best people 16, and rate of change 13. So the sustainable competitive advantage here would be we will win by having the fastest response time in the industry. So that is not an advertising slogan, but that's just something you can use with your people. So with your transport business, it might be responding to emails, it might be answering the phone call within 3 wings, getting back to people promptly, it might be invoicing promptly, it might be picking up promptly, it might be delivering promptly, but in this case, the example, the business has decided its sustainable competitive advantage will be we will win by having the fastest response time, by having a fast response time. And that's just a focus that people would use internally, and it covers right across the range, response time. It might be, and this came up with a client just recently, where they actually admitted they were slow in reviewing the salaries of their staff. They said they were going to review them in March, they still hadn't done them. So that's a measure that they hadn't kept up with their, in their case, their sustainable competitive advantage wasn't a fast response, but that's dropping the ball a bit by here it is April and the salaries haven't been reviewed. That's a contradiction, not having a fast response. So you need to then have that, use that with your people, and you need to set up measures as to how you will measure your complying and achieving a sustainable competitive advantage. You just need 2 or 3 key performance indicators. Now the next tool to look at, once again, to help improve your profitability, and I did this again recently with another client, a new client, you look at the grey boxes on where we've got strengths, customers, business experience and so on, weaknesses, consulting skills and so on, opportunities, value-added products, acquire other firms, and threats, no change and so on. So look at those. So what you do when you're actually writing, and I facilitate strategic SWOT analyses, you look at the strengths of the business, which are internal, so they're in the grey box there, finishing up at finances. You then look at the weaknesses, which are also internal, get them down. You then look at the opportunities, and then you look at the threats, and the threats come from the outside. So when you've done that, you can say, how can I use these strengths to commercialise these opportunities? And you perhaps come up with the actions in the darker blue box. How can I use these strengths to overcome these threats? And you fill out another box. What do I do to make sure that these weaknesses don't spoil the opportunities? What if the weaknesses combined with the threats? Corrective action. So you would put into those other boxes there, new VA product to customers, new value-added service to customers, annual planning day, remove negative people, target weak competitors, and so on. You've got some specific actions there that you can take to improve your business and improve your profitability. And you need to update this at least a couple of times a year because things change. Then you need to put it all into a one-page plan. So this is an example of a one-page plan which was written in 2014, but it was just been revised this month. So you might have, in this example, sales of 1 million, 6 staff, profit of 10%, average sales 10,000. So this is just, of course, an example, a plan. Then you might say that you want to get your sales up to 1.5 million, you want to have more, same number of staff, you want to have an increased profit of 20%, and you want to get an average sale up to $15,000 from 10,000. So this, just remember, this is just an example plan. And then you would identify from the work you've done earlier using the various tools that we've looked at, the strategic SWOT analysis and the sustainable competitive advantage and mind mapping, you've identified service quality is a big issue. So the actions which I've identified here are that you want to evaluate customers' needs, you've got the person in charge of doing that, you want to update your customers' service strategy, who's doing that and by when, train sales staff to a higher standard and so on. And then grow sales, you have a one-page plan as to how you're going to grow your top 20% of clients and so on. And then grow profit, cut 20% of waste across business. Now that's another area that we don't have time to talk about it today, but that's another whole area of how you can cut waste, excess costs in a business, and that's another way you can increase profitability to be able to have more money, more cash to be able to reinvest into safety, to make your business safer and create a virtual circle. If you've got money, you can afford to buy new equipment, make things safer, whereas if you're short of money, you're being chased by your creditors, you've got old equipment, old premises, old trucks, old trailers, a pallet account that's not under control, you're much more likely to have an accident. So the objective of any business should be to have a safe, profitable operation, because no one should go to work with the risk of being killed or injured. We're fortunate in Australia, we've probably got the highest OH&S standards in the world, I would think, in the way we do approach it, but we've still got a long way to go because the road toll is still far too high. It should be nil, and everything we can do to cut it back is in everyone's interest, not to mention that, of course, the personal cost of injury and death on the road. So this process will help you increase your profitability, get more cash into the business so that you do have the money to invest into whatever it might be, training your staff on better OH&S, setting the right example, having barriers separating vehicles and forklifts, using the right forklifts, loading and unloading trucks, using pallet jacks properly, using curtain siders, restraining loads properly, having the equipment properly maintained, having the right rosters so the drivers aren't tired. All those sorts of factors, a myriad of factors which, if they're not carried out properly or they're not kept up to date or not current, can increase the risk of an accident. So it's a self-funding process. The more money you can put in and make a business, the safer. It reduces chances of something going wrong and having an accident. So this should be part of your ongoing process of in your one-page plan. And then with the one-page plan concept, you can have a one-page safety improvement plan. You can have a one-page re-equipment plan. You can have a whole series of one-page plans, but your overall plan should be able to be summarised into one. By all means, have some supporting documentation if you need it, a page or two for the now, some more on the where. The sorts of business plans that I facilitate are generally only 10 or 12 pages long, and the executive summary is just like what you see in front of you, a one-page plan. And you can go to the other documentations. Now remember, there's the old joke with business plans being done and just put on a shelf gathering dust. Well, if you're going to do that, save your money. Don't waste your money in writing in the first place, because the real benefit in a business plan is not so much writing it, but the real benefit is implementing it. So by following this process and keeping it simple and summarising it into a one-page plan, you can take specific actions to increase your profitability and give you more cash and funds to be able to invest more into safety and improvements and make your business safer. So that's the process that works very well. It's amazing how big a business you can actually run with a one-page plan. So change is difficult in summary, but having a high dissatisfaction is one of the key to raising your potential. That was in the DVP, dissatisfaction, vision and plan, in the earlier slide. You need to get clarity to where before you want to go. Write down where you want to be with sales, with your people, with safety, with lost time injuries and so on, before moving into the how. Then you need to just focus on key issues within your control. Don't worry about the government. You get a vote every 3 or 4 years. Don't worry about the economy. That's much bigger than you. Don't worry about the banks. They're bigger than you. You've just got to comply with their rules, with their requirements. If you don't like them, change banks. And if you find you can't change banks and you're not happy with your own bank, maybe it's you, not the bank, that's being unreasonable. and don't blame other people. Don't blame your customers. Just focus on what you can control. Use a force field as a problem-solving tool to drive strategies into actions. That works really well. It just takes practice. You need to be clear on your competitive advantage in the market. If you can't work that out yourself, you get some help. Use one-page plans to focus your implementation process to achieve your goals, and get assistance to stay accountable to achieving your goals and that your plans are realistic. And before we hand over to and summarise further or have questions, what is your key message from today's workshop? I'm happy to take that by way of question or comment, but why not just write down now what your key message is from today's workshop.
Do tell us what your key message is, Barry.
My key message, Angela, is that every person, every business should have a one-page plan which they update regularly, at least every month or 2 months, update as to what they want to do with their business, where they are now, where they want to go and how to get there, documented. It's obviously very clearly easily done these days with templates and in Word updated. So that's my key message, Angela.